moves, and our next guest thinks the momentum story could continue. Philip Petursson joining us here in studio as Chief Investment Strategist, IG Wealth Management. Nice to see you.
Good to be here. Thank you.
The interest rate story, how does it fit into where the markets are right now? Like, how should we be thinking about interest rates and the ultimate moves in the market as a result?
Well, interestingly, I would say that interest rates perhaps aren't helping the markets. The markets are moving up based on the strong economics that we're seeing in the United States, the stronger earnings expectations that we're seeing in terms of guidance for companies through the remainder of 2024. If the Fed or the Bank of Canada were to cut aggressively, in theory, that should help valuations, that should help stocks, but stocks are doing fine on their own.
Yeah. Okay, so let's talk about what ultimately what could potentially happen on interest rate policy. So James Bullard, who is a Fed official, a lot of these Fed officials, they get out and they say this, they say that. There was Neil Kashkari, who recently said he thinks there's the possibility that we won't even see rate cuts in the U.S. The economy is doing so well. Let's hear what Bullard, who is the head of the St. Louis Fed, had to say about the idea of rate cuts this year. Have a listen.
You should probably take the committee and the chair at face value. I think their best guess right now is still 3 cuts this year. And of course, the data can go one way or another, but that's the base case.
All right, former head of the St. Louis Fed there. So he's saying just accept the idea that interest rate cuts are coming in the United States this year. Do you accept that idea?
I do, and Mary Daly said the same thing. She said there's no reason to expect anything other than 3 cuts, or I'm paraphrasing there, but it seems that the Fed is putting forth the idea that yes, cuts are coming, yes, it's going to be 3, but let's not get ahead of ourselves. It's certainly not going to be 4 or 5, and by the way, it could be 3 and that's it. Right? They're not saying that they're going to continue to cut into 2025. They're saying, yeah, 3 cuts seem reasonable, and we'll go from there.
And what about the fact that if the economy is chugging along in the U.S., we'll talk about Canada in a second, but if the economy is chugging along and some people are suggesting that rate cuts might not be needed, are there ramifications for the Fed cutting into that kind of environment?
Well, if you think about it in terms of the real interest rate environment, inflation in the U.S. is running, say, 3%. You have the Fed funds rate at 5.5%. That's quite punitive from a real interest rate perspective. And so there is room for the Fed to cut without saying, hey, we need to cut because the economy is weaker. No, it's we can cut and get the Fed funds rate to a normalized level, which could be, say, 4%. That could be it, and we could see it stay at 4% for a while.
Okay. By comparison, what's your take on what's happening here in Canada? We have a Bank of Canada interest rate decision this week.
Very, very different. Very, very different than the United States. We had weaker jobs numbers. We had unemployment now that it's 6.1%, the highest since 2017. When we look at jobs over the course of a rolling 12-month average, it's the weakest since post-COVID. And so it's a very different environment in Canada than the United States. We have a weaker economic environment overall and lower inflation overall that supports the Bank of Canada to cut by more than 3 if they wanted to this year. And while the odds are against it right now in the futures market, they could still cut this week. They could provide an insurance cut or a surprise cut this week that would go against expectations, but it's entirely justified by the data.
And if the uncertainty is present enough for Canada's economy that you think, it sounds like you would not be shocked if the Bank of Canada were to cut interest rates this week. Why is the stock market at an all-time high in Canada?
Right. So the stock market is not levered to the Canadian economy. If you look at what's going on in the stock market, it's almost like a traditional rally for the TSX, which has been driven by energy, which is global oil prices, not Canadian oil prices, materials, which is global prices for gold and copper and other base metals, and then financials actually have been doing better as well. So we've got a classic TSX rally that has less to do with the Canadian economy and more to do with what's happening outside of Canada.